Happy Tuesday, Maverick traders. It is Rob again for 2 days in a row. Sorry you got to deal with me, but let's jump into the markets. In this session, we're going to go over the news of the day. We had a major CPI report this morning. We're going to take a look at some of the market internals and see where the strength and weakness is. And as always, I've got setups for you, one bull, one bear, and a sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, in the market, we had another up day, and we're going to talk about the price action. I talked a lot about it yesterday, the intraday price action, and I want to talk about what we saw today. But let's look at the numbers first. Dow Jones down 0.64%. Look, that is all because of United Health. United Health, they pulled back their guidance estimates and fired their CEO. They've been in free fall since their last earnings report. It's an ugly, ugly chart. I talked about it in the trading room over the weekend and said, hey guys, this is a great looking short. This is a wounded animal. This is where, the lion is finding the weak part of the pack. And I saw a lot of our traders jump on and have a really nice trade today and yesterday in UNH. The S&P was up 0.7%. Q is up 1.6. So again, another up day across the board. So the equity rally is continuing. At this point, any of my bears, which I always try to beat on the bears and also beat on the bulls when it's time, but mostly it's my perma bears. I've had them all kind of come around the last 2 days, and they said, you know what, Rob, you're right. They're on board. So look, the rally is to the upside. And remember, when the market's climbing a wall of worry, those are the best markets. When you can find reasons not to buy, the market just climbs those and climbs those. It's a great time to be long here. They announced that the next trade deal will be announced when President Trump comes back from overseas. So the market likes that as well. And we got a big jump in NVIDIA today off of Saudi Arabia news that they were going to make a big investment in their chips. So look, this is just more and more bullishness. What does that mean for the chart? We were already in a bullish section. High base, we broke out. I talked about this candle yesterday, how we just opened up and then just bought. Today we got a long upper shadow on the top, and I want to show you this chart because it looks very, very similar to the one yesterday. I pointed out that, we had buyers, any pullback. Look at that. The buyers were there. The bid was thick. This is institutional buying. And remember, yesterday I said, you're really going to see this when you get that takeoff at the close, when the traders say, hey, I'm going to have to turn these into market orders. I got to get these done because I've got more in the pipeline for tomorrow. This little sell-off here just tells me that we're weakening. That's all it's telling me. And look, I've been doing this for 27, 28 years. I love to share these little things about price action. I talked yesterday about how we ended up on a spike because, again, those traders were hitting market orders. Why we got that at the close. Here's the chart I talked about yesterday. And I said, look, the fact that we got this, it tells me that all of these people that just were sitting on the bid to buy, they said, I got to get these done because I got a whole bunch for tomorrow. You can see they just kept going back to buying. But at the end, there wasn't that surge again. Look, it's just telling me we're starting to get, I'm going to use the term a little long in the tooth, meaning it's getting a little old, a little tired. I am by no means bearish, but I do think that means that we're probably reaching near the top of this expansion. Do I think there's going to be a big pullback? Absolutely not. Absolutely not. Could we go back to 5,800? Maybe 5,800. But I think this market is really strong at the moment, and I love that it's climbing the wall of worry. Another thing I want to point out is the heat map. Remember, the heat map yesterday was like all green. The whole thing was green, except for these little red dots in healthcare and utilities. Take a look at this one. All of a sudden, it's like, oh, we're only green in a couple areas. And again, the big mega cap stocks, they really hit a lot of the weakness today. Another reason why I think we might be near the end of our little run. All that means is I'm less excited to take new bullish positions. I'm still going to let my bulls run. Any of the bulls I've put on over the past week or two, hey, they're looking great. I'm going to let them run. But as far as new positions, I think there might be some better entry points if you just wait a day or two. Just let this thing kind of run its course, maybe have a little pullback. I think you're going to get a better buying moment here shortly. Still very bullish, still at a +2. Everything is telling me to be net long. Let's go ahead and look at some trades. I've got one bull, one bear, one sideways. And a lot of the potential trades on my list haven't changed. I updated some of them. But this is the one that was on the list yesterday. This is HSAI Group, HSAI Group. This is a Chinese auto parts manufacturer. And I didn't include all the chart because I really want to zoom in or what's happening to the right. But this stock was a $5 stock a little bit ago. Had a huge run, massive run, and it's been consolidating in the $10 to $15 area for the last like 4 to 5 weeks. It got hit with the tariff stuff, and you can see here, we've now had some nice run. We have a nice pullback. We've got moving averages that are starting to turn. To me, this thing looks like it's ready to make a run all the way up here to this 24. That is a very optimistic price target, but guess what? Remember, I love these walls of worry where everyone has reasons to be bearish. These are the markets that typically grind and grind higher and just frustrate the bears. I used to be one of those bears years and years ago, and I would be so frustrated by these markets because they shouldn't have been going up. Now I just trade the price action and I say, look, I don't know what the hell's going on. I'm just going to be on the right side of the market. And that's all I try to do is be on the right side of the market. There's a little bit of resistance here at this 19 area, but after that, it's into the 20s. You can play this as aggressively as you want. I think an 18-20 bull call spread vertical looks fine. I think some long calls actually look good here as well. I think this one's got some nice upside to go, especially if the China tariff stuff moderates. Here we are at the sideways trade. Now this is Barrick Gold. The ticker symbol on this one used to be GOLD, but there was some confusion with the CFDs, so they changed it to Barrick Mining Corporation. This is just B. Gold, we know the gold has run up, hit a big high, and it hasn't quite pulled back yet. This is just trading between 17 and 21. However, that being said, I really want to focus on this range, this 17 to 20 range. I think that's the real range. I'm going to go ahead and take this little bit out of there. I want to be at either the 18 or even, I want to be at the 18 for the midpoint. So I'm going to do like a 17, 18, 19. That means that our profit window is probably going to be right about here on a butterfly. If you want to go wider than that, this has got 50-cent strikes. So you go 16.50, 18, 19.50. And you open up a butterfly here. So right at the money butterfly. I don't think we're going to break down below that 17 on Barrick Gold. And this short has been one of my favorite shorts here for the last little bit. Look, there's no great shorts. They just don't exist at the moment. There's no great shorts other than United Health. But even that one's probably gone a little bit too far at this point. I like this Newsmax because it's not going anywhere. It was a recent IPO, had a huge burst, and you can see ever since it came down from its lofty highs, it's been sitting between 22.50 and 24. I love this little point up here. I'm not looking to be a genius here. I'm looking at doing like a 24.25 bear put spread or a bear call spread, or maybe like a 23.25. I don't need it to go down much. I just need it to stay weak. And I think this thing is likely to stay weak. And if we get any little bit of selling, it could easily go down below that 23 area. Let's talk about tomorrow. I haven't changed this from yesterday back to bullish. New highs unlikely until the tariffs are completely settled. I'm still there. I'm bullish, but I'm saying I don't think we're going to make new highs until probably after the 90-day tariff window has been settled. Don't think we're going to see new highs. I could be wrong on that. So you can see I'm bullish, but it's not like I think we're running away and this is like the greatest opportunity ever. It's It's a bullish market, and that's really all I can say. There's no economic reports coming up, hardly any earnings reports. We're in this kind of news vacuum where a lot of things have happened. We're going to get a little bit more news on some tariff deals, but really, economic news is calming down. Earnings news is calming down. The market is showing a little bit of signs of fatigue. I don't love it here for new entries. If you've got bulls, keep squeezing them. I think it's a great time to be long. Just keep squeezing them. But for new ones, I'm looking to probably wait a little bit for things to cool off. Hey, that's Market Roundup. Thanks for joining me. Goodbye, everyone.